Good afternoon, everybody. This is Mark Sebastian, the founder of OptionPit.com. Reminder, this is for educational purposes only. This is the trade idea of the week. And before we do that, I want to start playing the Fed's official music. This is legitimately what I think about when I see the Fed. The the C in FOMC should stand for clown, Federal Open Market Clowns. All right, they drive up in a tiny car and all 10 of them get out. They are a ridiculous group of people. That being said, rates are going to stay low, which is going to be good for something like XLU and any kind of high dividend stock. You know, AT&T and Verizon have their problems, but you know that will make their dividend yield look more attractive. There could be a little push for yield. That being said, you know, if I look at the financials, they're getting kind of pounded around, and you know, I get it. I get it. Not sure I'm a huge believer that in how bad JP Morgan and Google and Goldman are getting beat. Now, JP Morgan's that's down that much because partially at a 44-cent dividend. But if you look, even after adding the dividend, JP Morgan's down 80 cents and Goldman Sachs is down 60. JP Morgan kind of unfairly bashed, or kind of overly bashed. They've got earnings coming up on the 13th, so that's actually pushing volatility higher. So when I look at a chart of JP Morgan, I look at that volatility and I go, wow, that's high. But the nice thing is they've got earnings, so I've got something I can anchor off of. The 30, the OX 16 is the regular OC month, has earnings in it. So when I look at the 60 calls and the 61s, when I look at these calls and I see that I can buy an at the money call for just $1 in the earnings contract month, or I can buy the 60 and a half for $1.30. I mean, let's do some math here. All right, 60 divided by 180. You're paying a 3% premium, or excuse me, not 180, 150. So you're paying basically a 3% premium, and you've got an easy shot at catching a bounce here. So there I am, bid 158 for my spread, or for my call option. I'm going to sit on it. I'm going to try and get filled on it. And you know, my goal is going to be to sell it for $2. Now let's talk Macy's. I put that Macy's trade on last week. It was a good trade, and I'm kind of flat dollars on it at this point. To down a little bit, and that's because I didn't sell it when Macy's got to 50. I should have dumped it. I could have done, you know, basically doubled my money, and I put an offer in and did not get filled. So that's a case of bad position management. All right, where I didn't get filled on my trade. I should have gone and actually chased that order and sold it. And that's kind of the way. That's where those things can get you. I'm not currently carrying any other trades from my trade ideas of the week, but I am working again to get this one filled. So just to make our lives easier, I'll pay one. I will probably pay 159 here in a second. Yeah. So I'm going to pay 159, and I'm filled. So I have this call on for $1.59. My goal is to sell it for over $2. If you've got questions about anything we do, you can email me, mark@optionpit.com. You can call me 88-TRADE-01. And if you want to learn about to move from single name options to doing spreads, you can go to optionpit.com/option income. Option dash income. And you can take my special debits and credits course for just $12. It's just the processing fee. It's a really good course. So if you're interested in learning about debits and credit spreads, go to optionpit.com/option income. All right, folks, on that note, I hope everybody has a great weekend. I will talk to you soon. This is Mark Sebastian.